The new IG trading platform. Fewer clicks, flexible layouts and time-saving settings. Split charts across multiple time frames and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.
Hello and welcome to Chart in the Market here on Thursday the 30th of November. Now we're coming into a new month, so it means that next week we are going to see a whole raft of economic releases. But for the time being, we still have a focus on what's happening in terms of the UK. Comes off the back of that big move higher in terms of sterling because of the fact that we now look like we have a divorce payment settlement between the EU and the UK. But this pushes the onus onto what's happening in terms of the Irish border. Now, if we do see some sort of agreement, and apparently talks are ongoing between Northern Ireland, Republic of Ireland and the UK government, if we see some sort of breakthrough, then the expectation is this could lead to another strong move higher for the pound. And what we have been seeing is the stronger pound is working to the detriment of the FTSE 100 in particular. Now, interestingly enough, if we see a strong pound, as I said, this is negatively affecting the FTSE 100. The overall trend we're seeing within the markets is towards the upside. So over time, despite the fact that the pound is going up, the FTSE is also going up. But we're also seeing on days where we're seeing strong movements towards the upside for the pound, we're seeing weakness in terms of the FTSE. Not necessarily the case with the FTSE 250. That market doesn't necessarily have the same kind of correlation with the pound as we see with the FTSE 100 because of the international elements of that market. So certainly bear that in mind. If we did see some sort of agreement in terms of the Irish border issue, the expectation is we're going to see strong pound, and that should mean that the FTSE 100 in particular would lag both the FTSE 250 but also its European and US peers. Later on today, we're expecting to hear from OPEC. I mean, it's going on throughout the day. Yesterday, the meeting started. The expectation is that we're going to see a 9-month extension to the current production freeze from both OPEC members and some non-OPEC members. Crucially, yesterday we pretty much saw agreement across the board within the OPEC members, but today, 3 p.m. Vienna time, we see Russia enter negotiations. So if Russia would also agree to this, then it looks like we'll have a deal across the line later today. And it brings to mind the idea that I was talking about earlier in the week, that there is a potential for us to see a buy the rumour, sell the fact issue come into play, where we see markets rally with the value of crude seeing upside in recent weeks. And then when we do finally see that announcement, then there's almost like no reasoning for it to continue to go higher, and people were essentially trading just that announcement, and that's when we see it start to move lower. So there is a possibility of that, of course. I could be wrong and we could just see oil prices spike, but by and large it's expected now. Markets are pretty much pricing in this 9-month extension, and given the fact that we've been hearing so much from different OPEC members and everyone talking about this 9-month extension, wouldn't necessarily come as a surprise. Closer to home, we've got the Eurozone CPI reading. That came in at 1.5%, up from 1.4, but the expectation was at 1.6, so somewhere in the middle of the two. And then looking ahead, we do have a couple of readings coming out of the US, personal spending, Chicago PMI and the core PCE price index coming out later today. Looking at the indices space, we've seen a strong start to proceedings for the likes of the US markets in particular. Then the DAX, again, seeing a very strong start to trade. But the FTSE 100 is lagging, and that's because of the fact that we've been seeing this strengthening pound, in particular against the euro sterling, seeing sharp deterioration. If we look at what's happening in terms of the daily time frame, though, we can see that we've come back down towards this 61.8. And this perspective gives you the idea that we are in a very clearly trending market towards the upside. Any weakness that we've been seeing over the past month, to me, looks like a retracement of this rally up from 71.95. And we talked about this over recent weeks, about the idea that we could come into the 61.8, which we've pretty much done, but then we also could come into the 76.4. Well, what we saw yesterday gave us a clue that potentially we could go into that 76.4. And that's because if we look at the 4-hour chart, we can see that the recovery we had been seeing with the creation of higher highs and higher lows was negated with the break below 73.80. Now we're seeing some strength coming into play now, and that by and large is associated with the fact that we moved into this support structure. You can see here on a number of occasions we've seen between 73.55 and the low here at 73.50. We've seen this market bottom out a number of times. As soon as we drop below that level, we've started to see some sort of strength coming into play here for this market. So yes, we're seeing some upside at the moment. There's a good chance this could be a retracement before we roll over once more. And then, like I said, there's a possibility we could be coming into this 76.4. I think this is going to be heavily reliant on whether we get this Irish border deal across the line or not. And if we did, the expectation is that would be a big drag on the FTSE 100 given the strength we'd see in the pound, and that could bring us closer towards that 76.4. So the break below that 73.80 does give a bit of a warning sign that possibly this market could roll over once more, despite the fact that we're now regaining ground for the FTSE 100. German market, the DAX, you can see here, the wider trend again is towards the upside. We saw this pullback. Unfortunately, we came back below this area of support here, which didn't necessarily make it the easiest thing to trade. But nevertheless, this market started to bottom out. We had that double bottom formation. We've pretty much been trading within the symmetrical triangle recently. But the breakthrough came with the breakthrough trendline resistance, but crucially your first swing high that we have here, 131.64, and with the break up 131.64, that means that the weakness that we saw coming into play yesterday looked like a buying opportunity. We didn't unfortunately reach the 76.4. We hit the 70%, which is somewhere in between the two, and we hit the 61.8, but we've clearly turned a corner and now moving higher once more. So this is key. I mean, this is one great way to trade triangles. If you see that breakout, sometimes it can be quite difficult, but because by the time you see the breakout, the signal that you see the break through that first swing high, by the time you see that, it's not necessarily the greatest time to be buying because the market's already quite overextended in that direction. But because of the fact that a symmetrical triangle doesn't necessarily have an innate bias within it, generally it is going to have a relationship to the underlying trend. But nevertheless, it means that the market at that time is seeing wide swings in both directions. And as such, when we do see the breakout, it can be useful to be able to play the retracement following that to then be able to really finally project out of that formation. And that's exactly what we've seen on this occasion. And this is the Dow. Now, ultimately, this market keeps going up and up and up. The expectation is that we're going to see some sort of tax reform deal across the line, possibly by the end of the year. And this 4-hour chart shows you that essentially it's all about trying to get into some sort of retracement when you get it. The hourly time frame shows you that sometimes you do get these periods of consolidation, and this really goes to show that we're not likely to see any sort of major retracements or many major retracements at the moment. And you may have to just wait for these kind of moves, these short-term pullbacks, short-term sideways triangles or flags or pennants, you know, and then base your trades around that. And you can see on this occasion what you could do is, because we've got this triangle, you could see a breakthrough 239.46 would have given you a buy signal and put your stop below the previous swing low 238.90, and then expect it to project higher, and it's continuing to move higher at the moment. But certainly for me, essentially, as long as we don't break this 238.90, I do think the Dow is going to continue towards the upside. Looking at the FX space, we have seen a little bit of a mixed picture here in Europe, with the likes of the pound doing particularly well, but euro dollar not necessarily doing too well. And that drag that we've seen in terms of euro sterling has been one of the main reasons, if not the main reason, why we're seeing an underperformance in terms of the FTSE 100 versus its European peers. But starting off with euro dollar, the daily time frame looks like this. We've been talking recently about the fact that the weakness we've seen at the moment looks like it could be a retracement of this 11715 move up to the high that we have here. I don't have a horizontal on it at the moment, 11961. So this looks like we've broken out, because yes, we had the head and shoulders formation, we negated it with a break up through this swing high 11879, 11880, and now we're seeing some weakness. But with the uptrend in play and the break through that swing high, the expectation is that this is going to be a shorter term phenomenon before we start to move higher once more. But if we look at the 4-hour chart, we're going to look to utilize the Fibonacci's, and you can see that, as I was talking about earlier in the week, the Fibonacci's was still a little bit away from price action, pointed towards the possibility of further downside in the near term. If we extend this out, you can see the 61.8 so far has worked absolutely perfectly, and that has marked the low of the day today. We're seeing a little bit of a rebound, so keep an eye out for these Fibonacci levels. Let's see if we've got some sort of trendline support as well. Yeah, so that's hit both trendline and 61.8 support at the moment. So consolidation at the moment, we could see further downside, but for me, as long as we don't break the 11713 mark, a further deterioration would just be a buying opportunity. But for the time being, for the short term, unless we do break this area here around about your 11885 area, then there is still a good chance that we could continue to roll over on this short-term move before we start to see the buyers come back in for euro dollar. In terms of the pound, like I said, it's been an incredible week in terms of the expectation that we're going to see trade talks start in the near future. But you know, ultimately this came off the back of an announcement, and that's possibly why we're seeing such weakness in terms of euro dollar. The announcement that we're also likely to see tax reforms come to play. We're seeing progress really made in terms of tax reforms over in the US. Daily time frame shows you that we had been trading within a range recently. You can see this range that we had for around about 2 months. The wider trend is towards the upside, and we're starting to move higher now. You can see that essentially is a triple bottom formation with the neckline at 13338, and it points towards further upside. And if we look at the weekly, it shows you that actually it looks very likely that this is just a continuation of this trend, and there's a possibility we could even head back towards this trend line resistance once more. So this picture points towards further gains. The daily time frame points towards a similar kind of thing. The shorter term, though, is a little bit more difficult because of the fact that we're so highly extended towards the upside. Now, what we can see here on the 2-hour chart is that we are kind of gradually seeing some high highs and high lows within this. We definitely don't want tick by tick. Let's just grab the hourly time frame. And we can see here in the hourly time frame, this gives us a little bit more of a granular detail to say, okay, on the shorter term, this creation of high highs and high lows is going to be dependent on the holding of 134.06. So weakness that we're seeing at the moment is a buying opportunity as long as we don't break that level. If we did break that level, there's a possibility we'd be just looking at a retracement of that wider move. So yes, we'd be looking at a period of weakness, but that could just be a shorter, sort of short to medium term phenomenon before we continue on that vein. I haven't seen anything at the moment that says that this market's about to reverse lower in a very heavy manner. I do think over the longer term we're going to see the pound sell off, but for the time being we're in a period of strength, and certainly with the Irish border issue coming into play, I do think that if they get that across the line, we should see another strong move towards the upside for the pound. So keep an eye out for this 134.06. As long as that's not broken, I think it looks like we're going to see further upside for cable. And finally, this is Kiwi dollar. Not something I generally bring up too much. I just thought this was a particularly interesting one at the moment. Dollar yen didn't work out too well, so I was looking for something that took my fancy. You can see this market has been selling off very heavily over the past, say, 6 months, and we're clearly moving lower once more. And you can see here in terms of the stochastics, you can see that we're really starting to move lower from this trendline resistance once more. So it points towards further downside. It points towards, in my mind, the potential to break back below this 67.84 level, the previous low. And if you look at previous times that we've seen this kind of move, they've always been very sharp moves towards the downside. So that gives us the likeliness that we could see something similar. We could see consecutive strong down days. Certainly today's looking like one of them. 4-hour chart looks like this. We can see that we've broken below your first swing low on this occasion, which gives me greater confidence that this retracement we had been seeing is over. So I am bearish as long as we don't break through this swing high that we have here at 69.45, and given that wider perspective, we could be set for another strong move lower for the Kiwi dollar. Looking at the commodities space, everyone today is going to be talking about oil. We have got the second day of the OPEC meeting, and today we're seeing Russia coming into play with seemingly the wide agreement that we're going to see a 9-month extension to the production freeze within OPEC and a number of non-OPEC members. So we're going to start off today with what's happening with Brent crude. And if I bring up the chart, we can see that we're starting to move higher at the moment. Now, I was talking about the possibility of this buy the rumour, sell the fact move come into play because of the fact that by and large everyone expects now to see a 9-month extension, and certainly there's been enough talk about it. Nevertheless, if we look at the trend, it has been towards the upside, and certainly recently we have been seeing significant gains as everyone expects to see a deal come across the line. In terms of the hourly time frame, we can see that this market actually has been turning lower recently, and you can see the creation of higher highs and higher lows very clearly turning into lower highs and lower lows, but in a really great manner, because you can see here that we're actually seeing 76.4s hit time and time again. So with that, there is the possibility that what we're seeing at the moment is another retracement before we start to sell off once more. So if I look at the Fibonacci and just get the 76.4, we can see that we have come past the 76.4. We're just above that now. So we need to break the 63.58 to negate this view. Certainly, you know, I do think we're going to see an announcement today to say that they've got another production freeze in play. The question is whether that's already been factored into the markets and whether people have just been trading into the lead up of this, and then they get out of their positions once we see the announcement, and that could lead to this market turning lower once more. If we break through the 63.58 and then just above that 63 63, then it looks like we're just going to continue on the wider trend, which you can see is very clearly towards the upside for Brent crude. And finally, this is gold. You can see that we've been seeing a sharp deterioration coming into play here, and we broke through this 1285, certainly not necessarily a great signal. If we look at the daily time frame, whether this is going to get rid of some of the data or not, or give us a sort of clearer idea, are we getting some sort of trendline support coming into play? Not quite yet. If we look at, take it back to that 4-hour chart, we can see there's the possibility of us giving, so you can see here in terms of the fact that we saw higher highs, higher lows, we broke below the previous lows to retrace the wider move. Of course, you see trends within trends, and sometimes these smaller ones you have to almost look through to be able to see. So you can say that that could be a similar kind of smaller move, and that means that there's a potential that we could be retracing this move that we have here. And let's see if we're respecting any of the fibs so far. Let's just get that off and get the 76.4 on. And across it goes, and it's pretty much come past that level, and that's so far pretty much near the lows of the day. So there is an argument to be had that we are going to see further upside come into play for gold. We've seen a sharp sell-off come into play, but this 76.4 around about 1280, 1281, that's going to be a really key level to be watching out for today. A break below 1274 is certainly going to give me greater confidence that this market is going to really turn lower in a very heavy manner. We've seen some sharp selling, but look at what happened last time we saw very sharp selling. We started to find some support and we started to move higher once more. So I wouldn't necessarily be put off the idea that we could see a bullish turnaround from here just because of the fact that we've moved into it in such a sharp manner. Like I said, 1274 is going to be the key level that needs to be broken to really negate this uptrend that we have been seeing throughout November so far. That's it for today. Other than that, join us on IGTV and IG.com or follow me on Twitter. My name's Josh Mahoney here at IG. Have a great day and good luck trading. Thank you.
The new IG trading platform, fewer clicks, flexible layouts and time-saving settings, split charts across multiple time frames and discover price change alerts, orders to part close, an integrated Twitter feed and more. Try IG trading now at IG.com.